Hey there, Steve Rubis with another installment of Capital Markets Investor Relations in 2 minutes or less. Today we're going to talk about the art of war and the art of communications. And today's video is an impetus of a discussion I had with a colleague about shareholder activism. And he was lamenting the fact that a lot of management teams seem to wait too long or avoid people who can provide solutions to their problems. And as an IR person or an IR officer, I've had to deliver bad news everywhere I've been in investor relations. I've had to give bad news or bad messages to executive teams. And whether it's that bad news or shareholder activism, it often leads to ruffled feathers of executives. Why? Because they're very successful people, they're type A personalities, and it's their own thoughts and execution that's made them successful. And a lot of times this leads to difficult personalities in investors or a misperception that an investor doesn't like you. And the key takeaway is this, that if an investor doesn't like you, they're going to ignore you, not buy the stock, and not talk to you, period. So let's look at a case study of this art of war and misperceptions in communications. And I'm going to use Caesars Entertainment, where I led investor relations in 2019. And there's three things I want to talk about in terms of what I learned about that experience, and three things that I did really well. And let's start with the three things I learned. And the first thing I learned was that lack of control. Nothing I did or didn't do was going to change the outcome of the situation for me or anyone else working for that company. The business needed change, and change was going to happen. Number two was this idea of cultural fit. I was literally Rodney Dangerfield at Bushwood Country Club at Caesars Entertainment. I was not a great cultural fit, and I learned very quickly that that can be a problem. Now, what I'm proud of is that I did the best I could to achieve the best outcome for the company, the executives, and the investors. And then third, what I learned is that I would do it over in a heartbeat, and I would not change a thing, even though it ended badly or wasn't the outcome that I wanted. I wouldn't change a thing. And you know what? I have no ill will towards Caesars. I love the company. I loved working there. And for some reason, I still get questions in interviews like, Caesars hates you. Why should we hire you? And despite this negative perception, there's three things that I really accomplished when I worked at Caesars. And the first was this idea of financial expectations management. And the idea there is that I was able to set guidance through relentless communication with the sell side and limited information, and actually got meet or beat outcomes each of the quarters that I ran the program. And it led to a 30% higher takeout price in the stock. And then third, I was doing 20 investor interactions a week across email and phone. And this led to a solid narrative and credibility with investors. So let's look at what are the key takeaways from all of this for a public company executive. And I think there's three. And the first one is be open to the gift of negative messages. When an IRO or an investor is bringing you something negative, they're doing it because they want to see you be successful and they want your tenure to be long. Number two, difficult investors actually respect you. Work with them. Otherwise, they're not going to talk to you if they don't respect you. And then third, always communicate with your investors. If you don't communicate with your investors, you're going to have a short tenure because someone's going to get mad. Remember, when investor relations is too tough for you, it's just right for me. Let's get in touch and let me help you with your investor relations needs.